Good morning. I'm Dennis Bacon, the Chief Investment Officer at Beyond Wealth Advisors, and we're here for the June 2022 Economic Update. I have Scott Hawker with me. He's one of our advisors, and he's going to be asking me some questions about what's going on with the market. So, Scott, what's your thoughts on the bond market right now?
Sure, Dennis. As we see, the Fed has taken recent activity, and they've worked to stabilize rates. What impact do you feel like that is going to make on prices and inflation?
Okay. Well, first off, Scott, the Fed, kind of interestingly, people kind of fixate on the Fed and the fact that they're raising the interest rates. I've said this before, the interest rates the Fed does are really just the overnight rates that they give between banks when banks borrow money because they got to keep certain capital in the books, a little technical there. But what we're seeing right now, the actual bond market tends to be a forward-looking device. It's a market, not what the Fed sets. The Fed's already talked about having 2 more 50 basis point increases, which will raise the Fed funds rate to probably 2%. We think it'll probably be almost 3% by the time they get done, maybe 2.5%. But what the market does, we're trading bonds. We're seeing that being a little bit stable. If you own bonds in your portfolio, you've probably seen a really bad drop this year. 10-15% in a lot of cases. So we think most of that is over at this point in time. There will be a little bit more bond interest rate creep up a little bit, but it's not going to be like what we've seen in the past. And a lot of that because the Fed funds really determine the overnight rate, not the market. The market projects what the Fed's going to do, and the Fed's given us a pretty good idea of what it's going to do. So I think really most of the damage of the bond market has already taken place.
Fantastic. Okay, so my next question is about commodities. With the recent run-up, with all the discussion about commodities and the recent run-up that you've seen, what do you feel is next?
Okay, well, kind of interestingly, you have a big run-up in something, you kind of expect a pullback. Well, we kind of experienced that a little bit. We've seen the ag market kind of pull back a little bit. We've seen industrial metals pull back a little bit. The ag market kind of bounced back up. Ag market pretty much is pretty stable for the last month or so. Industrial metals and precious metals did pull back. A lot of that has to do with the fact that over the past 10 years, the commodities market really has done nothing. It's actually been almost negative for the last 10 years. So we would expect to see the commodity market continue to move forward, albeit not at the pace it was in the early part of the year. But I think it's a great place to be. It is a great inflation hedge. The biggest risk there is we go into a recession or something, some of the industrial metals and stuff could pull back, but that doesn't really impact the agriculture area, nor does it really impact the energy area to a large degree. The energy area really a lot of short supply issues right now, and that's not going to be fixed overnight.
Okay, well that's all great. I appreciate you for sharing that. What about equities? What's coming next? What do you expect in the future, in the coming months with equities?
Well, I think the key word here is volatility. We're going to continue to see a lot of volatility. With all that's happened, the month of May, we actually ended up pretty flat. Most indexes were up modestly. I'm talking less than 0.5%, so very modestly. With all the volatility that's happened, most people feel like it's been down a whole lot during that period of time. If you've had a portfolio that's well balanced, you probably have seen the bonds actually decrease more than the equities in the last 6 weeks or so. We do expect to see, between now and the end of the year, I would expect to see that we'll rise up in the equity markets up to our previous highs, maybe a little bit beyond those, because the U.S. economy is really pretty strong, and we still have that supply chain shortage issue, which actually helps companies on a profitability basis if they can deliver the goods. So we still are kind of fighting that issue, although the risk of that issue has dissipated a lot over the course of the past several months, I guess. So a couple of areas that are interesting is emerging markets is very interesting right now. They are way undervalued, and they've been hit pretty hard. If the country itself doesn't go into recession, a lot of the emerging markets look really good. Small caps look really good. Because they've kind of been hit hard during the downturn, and so we would expect the small cap area to be good, and also to stay very much on the value side. If we go into an economic slowdown, which the Fed is manufacturing, then the value companies, those with lower PE ratios, are going to do far better than those companies that have high PE ratios and you're hoping for more profit going forward. And that's really what the growth companies are. So the value side of your portfolio very well could be better over the course of the next year, and also will provide you a little protection if we go into a recessionary environment.
Okay, so you brought it up. You said the word recession.
I did.
Do you believe that we will find ourselves in a recession? If so, when would that be, and what do you feel the triggers would be?
Okay. Well, I think a lot of the world economies are going to head towards a recession. A lot of them just aren't as strong as the U.S. They haven't come out of the whole COVID drawdown like the U.S. has. I do believe that the U.S. is well positioned right now, and we've never had a recession when we are at full employment. And when you have a 3.6 unemployment rate, it's full employment. I'll give my age away here, but when I was college back in the 70s, and I had a great economics professor back then, and his term was, if we are at 4% unemployment, we are at full employment. Because at that point you have people that are transitioning between jobs. They kind of left a job, taking a few weeks off, getting another job. Takes a little while for that to turn around. And so really we are at full employment right now. And we actually have, I believe, over 11 million jobs that are not filled. Mm-hmm. So the odds of us having a recession right now are pretty low. I would anticipate that the probability of a recession really doesn't exist for the next year. And we could have one when we get into late 2023 or 2024. That would not be unexpected, but there's a lot of things to happen between here and there for that to happen. I think that the U.S. right now, the growth factor, the spending, and everything at the consumer level is still very strong. It's pulled back a little bit, but from a very high level. If we start seeing that drop, if you start seeing unemployment get close to 5%, then when you really start being concerned a little bit more about a recession. If it starts creeping over 4.5, I'm not too worried about the four number, because that just means we probably have filled a lot of these jobs, yeah, and now we have a normal environment. So I'm really not overly concerned about a recession in the near term. I think there's a lot of headwinds, a lot of black swans. We have the Russia-Ukraine situation, which actually is really impacting Europe. Ukraine really is kind of the breadbasket of Europe. You have a lot of energy issues going between Russia. Now, that actually portends very well for the U.S. Over the past 10 or 15 years, the U.S. has built several LNG, liquefied natural gas plants across the Gulf. And right now their problem is they don't have the supply of resources to actually produce as much LNG. And if that issue goes away, our ability to produce the liquefied natural gas for Europe and really get them off of the Russia energy train would really be good for them and good for us. So that's kind of one of the things I'd be looking for, is the ability for us to produce more LNG. We have the capacity, we just don't have the resources right now. Do you have any more questions, Scott?
I think that's it, Dennis. I appreciate
Okay.
all your wisdom
Okay.
and sharing your perspective.
Okay, great.
I'm sure our clients will appreciate that as well.
Well, we're having sunny weather. It is the month of June,
Yes.
and a lot of y'all are going to be on vacation. You'll probably hear this 2 weeks after we've done it. But we look forward to a great summer. Go out and enjoy the summer. We have less risk than we've had the last couple of summers from the COVID pandemic, and I know I've enjoyed a little bit of time at the lake. I hope to go enjoy a little bit more, maybe a little more baseball, and
Your
some
tan
stuff
looks
like
great.
that.
Yeah, I know. Your tan's looking great.
So, well, thank y'all very much, and y'all have a great summer, and we'll look forward to talking with you in the future.
Thank you.